The housing market is one of the most important sectors of any economy, and its health is often seen as a barometer of overall economic health. Recently, Warren Buffett, the well-known investor and billionaire, has made some warning statements about the housing market. This has led to many people wondering what Buffett is concerned about and what it could mean for the future of the housing market. Buffett is often referred to as the Oracle of Omaha, and for good reason. He has a reputation for being a very successful investor and has been a voice of wisdom for many years. His opinion on the housing market is important because he has a track record of making successful investments in various markets, including the housing market. Buffett has a unique perspective on the economy and markets, and his statements on the housing market should be taken seriously. In this video, we will delve deeper into Warren Buffett's recent statements about the housing market and what it could mean for the future of the economy. We will also analyze the current state of the housing market, the reasons for its vulnerability, and what a potential fall in the housing market could look like. By the end of this video, you will have a better understanding of Warren Buffett's warning and the potential impact it could have on the housing market. Warren Buffett, in his 2021 annual shareholder meeting, warned that the U.S. housing market is showing signs of a possible significant decline. He stated, "We're seeing very substantial inflation. It's very interesting. We're raising prices, people are raising prices to us, and it's being accepted." He went on to add, "We're seeing substantial inflation. We're seeing substantial inflation in materials, and we're seeing substantial inflation in the labor market." Buffett also highlighted that the housing market supply is not keeping up with the demand, leading to higher prices. Buffett's warning comes amid a surge in housing prices in the United States. Many people have been struggling to afford homes, and prices have been steadily rising for several years. However, with the ongoing pandemic, supply chain disruptions, and inflationary pressures, the housing market is showing signs of vulnerability. Buffett is concerned about the current state of the housing market because he believes that the high demand and low supply will lead to a housing bubble, which could eventually burst, leading to a significant decline in the market. He believes that the market is overpriced and people are paying too much for homes given their actual worth. This could lead to a situation where people will default on their mortgages, leading to a ripple effect in the housing market similar to what was experienced during the 2008 financial crisis. Factors that could lead to a fall in the housing market include rising interest rates, supply chain disruptions leading to increased construction costs, labor shortages leading to slower construction, and a significant increase in the number of foreclosures. If these factors continue to worsen, the housing market could be heading towards a decline, as predicted by Warren Buffett. Warren Buffett's warning about the housing market is based on his experience and expertise in the field of investment. He is concerned that the current state of the housing market, coupled with inflationary pressures, could lead to a significant decline in the market. The factors that he believes could lead to this fall are rising interest rates, supply chain disruptions, labor shortages, and a significant increase in foreclosures. It remains to be seen how accurate his warning will be, but it is essential to pay attention to his opinion, given his reputation and track record. The housing market in the United States has been on an upward trend for several years now. According to the National Association of Realtors, the median existing home price for all housing types in March 2022 was $374,000, up 18.8% from March 2021. Additionally, existing home sales increased 1.8% in March 2022 from the previous month and were up 9.9% from a year ago. These figures suggest that demand for homes continues to be high even as supply remains tight. There are several trends and factors that have contributed to the current state of the housing market. One of the main factors is the low inventory of homes for sale, which has been an issue for several years. According to the National Association of Realtors, there were only 1.07 million existing homes for sale in March 2022, down 14.6% from a year ago. This low inventory has contributed to the high prices and competition among buyers. Another factor that has contributed to the current state of the housing market is low interest rates. The Federal Reserve has kept interest rates at historically low levels to stimulate the economy, which has made borrowing more affordable for home buyers. This has led to an increase in demand for homes, which has put upward pressure on prices. Despite the positive trends in the housing market, there are some concerns and warning signs to consider. The first is the ongoing pandemic and its potential impact on the economy. The pandemic has caused disruptions in supply chains and labor shortages, which have led to increased costs for materials and labor. This could lead to higher construction costs, which could ultimately lead to higher home prices. Another concern is the potential for rising interest rates. If the Federal Reserve decides to raise interest rates in response to inflationary pressures, it could lead to a decrease in demand for homes and higher mortgage rates. This could ultimately lead to a decline in the housing market. The warning signs from Warren Buffett regarding the housing market should not be ignored. His warning suggests that there could be underlying issues in the housing market that could lead to a significant decline. Therefore, it is important to keep an eye on the market and to pay attention to any warning signs that could indicate a potential downturn. The housing market in the United States is currently strong, with high demand and low supply leading to increased prices. However, there are several factors and warning signs that should be taken into account, including supply chain disruptions, rising interest rates, and concerns raised by Warren Buffett. It is important to monitor the housing market closely to stay informed and to make informed decisions about buying or selling a home. The housing market is vulnerable to a potential fall due to several factors that have been present for some time now. One of the primary reasons is the potential for rising interest rates. The Federal Reserve has kept interest rates at historically low levels to stimulate the economy, but as inflationary pressures continue to mount, the Fed may decide to raise interest rates to curb inflation. Higher interest rates could lead to a decrease in demand for homes and higher mortgage rates, which could ultimately lead to a decline in the housing market. The housing market's vulnerability is also related to the issue of inventory shortage. As mentioned earlier, there is currently a shortage of available homes on the market. This shortage has contributed to increased competition among buyers, which has led to bidding wars and higher home prices. If inflationary levels remain low, it could lead to a decline in demand for homes and ultimately a decrease in home prices. Another factor that could contribute to a potential fall in the housing market is the ongoing pandemic. While the pandemic has not had a significant impact on the housing market, it has led to disruptions in supply chains and labor shortages, which have increased the cost of building homes. These increased costs could ultimately lead to higher home prices, which could make it more difficult for buyers to afford homes. Finally, the overall state of the economy could contribute to a potential fall in the housing market. If there is an economic downturn or recession, it could lead to job losses and decreased consumer confidence, which could lead to a decrease in demand for homes and ultimately a decline in home prices.